All right, guys. Welcome to the Sunday market review with James and Kenny on the line. And we're going to talk about the usual pairs that we talk about. So we're going to kick it off with the Dixie. Just by the way, this is basically what we're doing, and we're sharing it. So it's not a financial advice in any way, shape, or form. So take it with a pinch of salt, do your own research, and take accountability for what you do. Okay, with that out of the way, let's smash it. Okay, so Dixie, right? Let's look at Dixie. So Dixie on the weekly chart, what we've got here is we've got some kind of a divergence between here and here. There's some divergence there. Is it going to play out in terms of it going back up here? I don't see it. I mean, we may go up a little bit. We may go up a little bit because of the incoming debt crosses. For this one is the 50 EMA is going to cross the 200 SMA. So you're going to get some impact from that. The one that I'll be looking at is this one, which is the 50 SMA crossing the 50 SMA. That's going to be the big one. So you're going to get an initial dump from this anyway. And then, you're going to get further dump. So any move to the upside, because it's a dead cross, you can rally into it. So we can rally, and even the rally could come even all the way up to here. It's possible. It can come to this side, but it's a short-term rally. If you take it to the monthly chart, you can see that, we've come below this big selling candle. And we kind of selling volume is declining. So you got big volume, smaller volume, smaller volume. So the volume of selling is declining, but I don't think we're out of the woods yet. And because there's a pink candle here, which is my candle of interest, which is on the daily chart, which needs to be exceeded. So we're not done yet. So definitely we'll go down some more before. So there's a little bit more downside on the Dixie. And so that's why obviously I've got my interest box right here. Any move to the upside would be temporary. And then obviously we continue coming down. So that's my kind of assessment of the Dixie. I don't even need to go into any lower time frames at all. That's all there is. So what I'm going to do is I'm going to pass it over to James for James to share his thoughts as well.
Yeah, so we're making our way into the highlighted area here, which we have been forecasting since this bearish pattern was printed. We predicted a rollover, and that's what we've been doing. Invalidations are above these three lines and below these three lines here. We're predicting us to get a ping count. So we'll probably, do 1, 2, 3, 4, 5 as we're doing right here. 1, 2, 3, 4, 5. So whenever you Google, wave counts for ascending, descending, things like that, it's usually in fives. So we're starting here. We're going to count this as 1, 2, 3, 4, and we're resolving this fifth wave. In doing that, we're also probably going to create another wave count. This time, instead of an ascending wedge or a broadening wedge or a megaphone wedge, sorry, not ascending wedge. Well, I guess you could determine it as that. Um, we're creating another one as we resolve the bigger one. So 1, 2, 3, 4, 5, and I think it gets resolved in this area, and I think we'll probably break out around mid-September. That's all I got for Dixie.
All right. So our next pair for discussion is the Nasdaq. So and this is the monthly chart. The month is not ended, so it's really it's not, we can't draw much conclusion from what is happening here. The only thing I wanted to flag is volume. So big volume, smaller volume, smaller volume. That is not good. You want to see increasing volume for the trend to continue going. So that's a concern for me on the monthly chart. The month is not ended, still got about 8, 9 days. But I want to see volume come in. And if it doesn't come in, then you're likely to have a retrace first before you go. If we go to take it to the weekly chart, last week we had this warning candle. I call it a warning candle. It's a warning to the upshot, and I think we drew this box in terms of where we might land, and that's exactly where we've kind of landed in it. We didn't go as high as I anticipated. We've been rejected of the excuse me, of the Bollinger Band here. And we've tried again and been rejected again 3 times. So that doesn't look good. And I think on that basis, you know, I I probably would say that actually we come down and come and retest somewhere here, around the 2100 or even lower towards this point here. Because currently now, obviously, with what's happening in the Middle East and everything else, I think on Monday people will be spooked up and they might, sell it, and it potentially comes down to about here. So I'm on the downside on the Nasdaq. Not I'm not bearish, but there's a pullback. I'll call it a pullback because again, if you look at the daily chart as well, we're going to have a golden cross, right? And when you're going to have a golden cross, you tend to dump first. You tend to dump, you dump into the golden cross, and then you go up after the golden cross. So I won't be surprised if, another scenario is I won't be surprised if we actually even then try to go up some more, try to go up, do a double top first to spook everybody off. And then you have your golden cross, and that'll be the push for the golden cross. And then afterward, you get a dump. So I'm still expecting that dump, and I think it probably comes back down to about, this zone here. There's liquidity sitting here on this candle. There's liquidity sitting here. And so, at the very least, we may come all the way down and test this 200 moving average on the daily chart and potentially even close this gap, wick down, close this gap, and then continue the journey to the upside would be what I would expect. So that's what I'm seeing on the Nasdaq. So even if we go up, it will be a minor push to the upside, but I'm expecting a pullback towards this 200 moving average after the golden cross happens. So I'm gonna pass it back to James to just give us his thoughts as well. Okay, guys, our next pair is the XPX. The XPX on the monthly chart. You can see here again, I'll flag it. It's volume. So, huge rejection of lower price. We continue going up. Great volume here. We go up higher, lower volume. I don't like to see that. When I see that, it starts flagging warning signs for a potential pullback. Again, I'm not bearish, but I'm just flagging the potential that we may do a small pullback, back to the middle of the band, which is sitting between the 5693 and the 5784, somewhere there. We may do a pullback to that zone. If you step into the weekly chart, again, you can see we had a warning shot, and it's very similar to the Nasdaq. You try to go up through the Bollinger Band, rejected, go again, rejected again. That normally is not good. Twice rejection. And so I'd expect that we come back into this box. It's not going to happen, probably all going to happen next week, but you might be surprised. We could just get, a candle like that. And that could be it. We could get a candle like that from here. And if I measure this is a 3.09%. So if I put 3.09% down here, it will be over, right? Would have done the pullback. So I won't rule that out as well. But there's also a tiny, tiny possibility, again, that we try again. We try again to go up and break this line. We try again. So that's a small probability for me. I think I'll put that probability as about 30%. But 60, 70% probability that we definitely pull back into the zone before we start cranking up again. So that is what I'm thinking on the XPX. I'm going to pass it over to James to share his thoughts.
So I'm actually a bit more bullish on S&P 500 than Nasdaq. I'd be about 75% S&P 500, 25% Nasdaq. At this point, um, just the top five defense companies are all in the S&P 500. So we got an engulfing right here. I think the S&P 500 kind of leads this race here, and while the Nasdaq kind of searches for that midline, I think the S&P is going to continue to grind along this red line here and show its strength over Nasdaq. So I'll be watching that in the coming days. I still would be hesitant for longs or anything of leverage. I would be using this to stock up on spot stocks and getting ready for this next move up. If you want to place some low bids on the option book for you know, for September, bullish prices while prices are low. I think that is the best strategy with this price action because eventually this thing is going to turn up, and I think S&P is going to be leading the way with Northrop and Raytheon and et cetera, et cetera. So that's all I got for S&P.
Okay, so the next pair we've got is gold. And again, I'm going to start from the monthly chart because it's interesting to look at the monthly chart just to give us perspective. Again, I come to the same old story. Volume, high volume, lower volume, lower volume. When that is decreasing, that causes me concerns. And I've been a bit bearish on gold for a while now. I did call the top here, which was good because it came all the way down here. Um, and we've done kind of a retrace back to the scene of the crime, knock some stop losses off. So let's step it back to the weekly chart and see what's going on there. So you can see the weekly chart. We have closed both out inside the KC channel and also the Bollinger Band, which is not good. And the volume is quite strong as well. Um, so I'm pretty bearish on gold at the moment. I think gold may go up slightly, I think. So there will be a small move to the upside, somewhere about maybe I'll say 3,400 to even the top here, which is around the 3,439 is possible. So, let me just grab that interest box and just put it there so we can look at how we fared last week when we come next week. Somewhere there, small rise to the upside. And after that, I expect us to come back into this bigger box. So there's a lot of liquidity sitting on this under this candle here, which we need to tap into. So I'd expect this to come all the way down here. And there's also liquidity also sitting behind underneath this candle as well. So we've got two areas of opportunity for liquidity to be sucked, which are sitting there. And I think they will take they'll take these two. And then after that, I think, maybe we get back to maybe 2.9 and we can continue going. But that's not going to happen next week. Next week's is just a case of it tries to get back here. And I think, for a small target next week, I will probably say we end up somewhere here after the move to the upside to about, 3,316, somewhere there, would be what I'd expect on gold. So that's all I've got on gold. I'm just going to pass it over to James to share his thoughts as well.
So what I'm looking for on gold is a big red PVSRA candle. You see it down here. If I see that, we're probably going to go down to the 3,000 range, probably 2,950 in that arena. But as it sits right now, this was a very bullish signature. I understand it was towards the top, and that means there's probably buys and sells in that candle. So a little bit of a spoof candle, but we won't get into that too much. What I think is more likely is we spoof this formation. So we have a descending wedge here, rising. Um, I think we have, probably 500 million people in the world looking at this chart here, and I'd say probably 150 million of them can kind of think they can trade this chart. And usually what happens is we break it, we invalidate the formation, we come after some lows like this one right here, maybe even a little lower. So maybe even to 32.26, but more likely 32.76. I'm looking for longs. Um, any of these lows they're going to come after. There's three of them. Which one they're going to choose, I don't know. That's why the box encompasses pretty much all of them. So I'm going to put the box there. I think we come after one of those lows, we get people to sell, we get people to short. And then if we don't get a big red volume marker while we're down there, if we don't get a big red volume marker to send us down there, and price just kind of does it automatically, and then say we get another green candle, I mean, that's going to be bullish. But I'm looking for that big red candle. I don't think we get it. I think we kind of just roll over and kind of fake everyone out and then continue higher. This is very bullish. I was hesitant to call a top on gold even back then, and I'm even more hesitant now. We were able to call this top just based on how crazy this volume channel was rising. But we weren't looking for anything super long term, and just be advised this could create a bigger pattern as well. So, but as far as next week goes, I think coming after a low and then continuing higher. That's all I got for gold.
Okay, guys, our next play is Bitcoin. So yesterday I put a video out on this already, so you know where my thoughts were. And I think I drew these lines yesterday. So I said, here, you're gonna either come here, you're gonna come here, or you're gonna come there. So two of them are already being ticked off. Um, and I think, it ends up scaling all the way down here, to be honest, this zone. I think we'll go lower than this. I think we'll continue scaling down all the way to here into Monday. Um, and you're going to get one of the biggest moves to the upside you've ever seen because a lot of people will short in here, down here, and they will be locked in. Similar to how you find like, these like here, right? You see how this worked out. So, we come down, we're coming down, we come down, we get this big green kind red candle, and the following week you zip down towards the yellow, but you don't even get it. You don't get there, and then it's quickly reverse back up. You know, that would be what I'd expect on Bitcoin. So we completely close red this week, Sunday into Monday. So this midnight will be red candle, and then we will start going down again into Monday, right? And probably Monday might be a down day. And then after that, you're going to get something like this. So where we kind of touch this, we may touch this, or we may go even slightly lower, something like that. And then we will rip back up very quickly because, like I'm saying, this is all a function of the golden cross. So, we've had a golden cross on Bitcoin here. And after a golden cross, you tend to dump and you dump and then you go up. That's normally what happens on the golden cross. Oh, sorry, where's the golden cross that I'm talking about here? This one here. So, since we had a golden cross, we've kind of come down and we're going up slightly and we'll come back down again. So I expect us to go way higher because when we look at the history of Bitcoin and its golden crosses, so here we did before the golden cross happened, we done 28%. So we moved 28%. After the golden cross, we did a correction. So we did a correction here after the golden cross, and we did a 62% move, right? So here we've done quite a lot. We did 49% move before we had the golden cross. So the golden cross happened here, this point here. And Oh, hold on a minute. I think my measurement is completely wrong. Because it's from here. This is important. Golden cross happened right here. 25%. Sorry, it should be 25%. Let me change this. It's wrong. 25% text. It's 25%. This is very important. So 25%. So we did a 25% move before, which comes up to here. Yeah, that's where the golden cross is. So we did 25%, and so after the golden cross, we expect to do at the very least a 60%. We've not done anything near 60%. I mean, from here all the way to there is only a 18%. So we need another 60% or so, which takes us to about the 145K. So we're not done yet in terms of the move to the upside, but this is a good correction. Small correction, get us back to worst case scenario, this 200, SMA or the Bollinger Band, and then continue the journey to the upside. So that's all I've got on Bitcoin. And I'm going to pass it back to James to share his thoughts.
So we get liquidity targets when volume breaks the red line here. This is the threshold line. Volume breaks the threshold line up here. We create a box around it, and we assume that this candle will be 100% filled. So that's what we did. We put a box around this candle. We got real close here. So, some exchanges might have got it. It was down to the cent, and we didn't get into the box there. As we go, we obviously create more liquidity targets, but they don't have boxes because they've been resolved. To move up here, this was the big red down candle here. It's resolved. There's no need to put a box around it. So we moved to present day. Here's another one that was resolved. We talked about this last week. We talked about this last week. I think that was on a lower time frame. But now 100% of the box has been resolved. And we created 2 new boxes to be resolved in the future. So we'll put a box around these, and you can see the liquidity on the table. We do have the second liquidity target with an average of 90,500. That is below us. That is the presumable bottom if we continue to free fall from this level. Fortunately, we're kind of seeing this in real time. So if I was a trader, not saying I am, not saying you could do this, you should do this, but I would long this if I was a trader. And I'd put my stop loss at 99,000 with relatively high leverage, and I would close that long at 102,750 right here, probably Monday morning. Things like this, though, what happens with bottoms in Bitcoin? Let's go to the 4-hour chart. What usually happens is something like this. So don't be surprised if we get something like that. This measures out to Tuesday, July 1st. So expect some sideways. This will probably give us a nice range to trade. And I don't see things escalating anymore in the downward direction. I think this wick is probably it. If we're down at the 98,750 level, then I would say we're probably going to go have a black swan wick down to 90,000. But as it sits right now, juicy longs, I'd be looking to jump in with stop losses at 99,000 high leverage.
Could we
I see
could
you
we
all.
not could we not zip below because the low was 98,955, right? So 98,955. We could
On what?
easily on Binance, on the Binance chart. So on the Binance,
Milo's 99.
yeah, if you go on the Binance perpetual chart, which is the biggest trading chart, um, so if you use the index, the Bitcoin index, you get slightly, but if you use the perpetual,
I'm on
so
perpetual.
yeah, put it on that candle, put it on the candle, and say what's the low? Put it on the candle. No,
Oh,
4 hour
okay.
candle. So you on 9,927 9.
99024.
So if I go for me, okay, maybe okay, this is just the Binance spot. Oh, sorry, spot. This was spot. Okay. Yeah, you're right. So the perpetuals hit 9,924, but the spot one, so the spot was 98. So on the Binance spot, it hit 98,955, right? So even if with this, there's a potential that we may zip down slightly lower before going like here. Look at the one with the pink candle to your left hand side, to the left hand side. No, yeah, that candle. So after the 4 hour candle, see what happened. So look at the big one, the big red candle. So you had a big red candle on the left hand side.
Oh, yeah.
Yes. And then after that, you have a small zip to the downside, then you go up, right? So that could be a scenario that could play out here where we don't
Yeah,
just,
that would be, I would agree with you if I didn't have this big blue box sitting here since May 8th. It just got 100% resolved. Just based on my strategy and how I trade, I would be punching myself in the face if I thought price was going to go lower. I mean, you've seen how long the blue box was here, so I mean, I have to with our second target being so far down, just not re I see us honestly kind of, you see how we like to do kind of things like this. We love to round out and create a W, if that's what you want to call it, if you can see that a little bit better, something like this. So I think
okay, cool.
have a good week, everyone.
All right.
Stay
And
vigilant out there.
yeah, yeah. I think there's the market is going to recover very quickly. Um, Regardless, it will happen very quickly and it will be a quick, swift move back to the upside. Blink, you miss it. Okay. So have a good week.
Definitely.
Hope it's helpful. Smash the like button if you like the content. And we'll catch up next week.